we've seen some big moves this week in both gold and silver. So first of all, we'll move it over to gold, and then we'll talk you through the move that we've seen in silver as well. So gold at the moment, where we are sat is quite an interesting level. So if we have a look in terms of retracement levels, we've come back down this week. If we take into account the lows prior to Brexit from the highs of 1,375 US dollars, we have come back down to that Fibonacci retracement level, the 61.8, where we've hovered over this level over the course of Tuesday's session at 1,266 US dollars per ounce. And we're just shy now of retesting the 200-day moving average. So what happened with gold here? As I'm sure a lot of you will be aware by now, if you trade gold, if you trade silver, essentially the stop losses at the 1300 level, which for a lot of traders who've entered into this position following on from Brexit, have now been taken out. So if you can imagine traders who've got into this trade following on from the Brexit breakout, a lot of stops have been positioned underneath that 1300 zone. And once it's finally given way and been taken out, we have seen a 3% drop to the downside, one of the most significant one-day moves on gold in 3 years. So it has been quite significant, the sell-off, but at the same time to be expected given that it was such a key level and that gold consolidated above this level for 6 weeks. So it has finally given way, and with that we've seen a nice wave lower back down to the 1266 zone. Now in the short term, what could we look at for the next major zones? I would look at certainly a retest of the 200-day moving average. You can see we're just about on the verge of breaking below yesterday's low, so that's the next level. Below that 1250 as well is an important level of support here for gold. Now, as we go into tomorrow's non-farm payroll, we could see some explosive moves off the back of that announcement. Now, we have a range here that if gold was to continue to break down, and let's say it breaks back below the 1250 zone, you've got the potential certainly for gold to break as low as the 1200s. That would still represent within this bull market that we've been in over the course of 2016, only a 50% correction. We've seen it on oil this year where it's corrected 50% from the highs that it reached earlier on over June, where it retraced from 27 US dollars to 52. It then had a corrective pullback of 50%. A 50% corrected pullback for gold at the moment would take this market back down to 1,200 and around the 10 US dollars to 1,200 US dollars per ounce at the moment. I suspect, though, we're getting quite oversold in the short term for gold here, where we could see a snapback in price off the back of tomorrow's non-farm payrolls. We'll have to await that data. We've just had the initial jobless claims come out now, and yeah, the US dollar is rallying right now. You can see it's breaking above its neckline, breaking above about the last 6 weeks worth of highs. That's going to put some pressure on gold and silver as we go into the US session this afternoon. There's not much more out in terms of major news items, but certainly non-farm payroll will be a big catalyst for the next move here to see whether those numbers come out above expectations or below expectations. If they come out stronger than anticipated, that will be strong for the US dollar. We could see another corrected pullback for gold, in which case I would be looking at a retest of the 1250 zone. If we take out that level, there is potential for a move back down to the 1200 and a consolidating between 1200 to 1250 over the month of October. On the flip side, if the 200-day moving average, which we look on the verge of testing right now, does hold at this point in time, if we do get a bounce off this zone here, that around about the 1250 zone where the 200-day moving average is sat currently, let's just double check the level there, 1256. If we do see that provide some support here, it could be an area where we do see a retracement going into tomorrow's non-farm payroll, especially if the numbers come out as a miss. So if they do come out as a miss, I would expect the US dollar to pull back and a retracement for gold, which could see gold retest between 1286 up to about 1295. In the short term, you could get a pop back to the upside there. I would also be looking out for the potential of a retracement trade too. So it really depends on how the non-farm payrolls come out tomorrow. Now, we've had several questions at the Gold and Silver Club over the course of this week, just with reference to gold, why it broke down so significantly once it broke 1300s. So I think we need to go back a little bit further in the chart to explain that. For that, I'm sure a lot of you are savvy to this already, but if you're not, let me just break it down for you and explain this. At the start of the year, in January, where we came off the 5-year lows here for gold, we saw over the month of January hedge funds, money managers add to this position. They increased their position on this by 150%. We saw significant inflows from managed money positions, which led to us also adding to our positions and entering into gold at the start of this year. Now, since then, obviously over the course of 2016, gold at its peak has been up just under 30%. Now, at the moment, it's hovering about 18% up on the year. As we come into the final quarter of the year, you will get a lot of funds and money managers who will want to book some of those profits, and they would have been trailing their stop loss up. Now, certainly after the Brexit move, where we saw a significant breakout up to 1375, the 1300 zone is a level where you would naturally look to lock in some profits, trailing up a stop loss on that. If you break below that level, there is the potential for gold to break down significantly from that zone. So we're not just seeing a case of sellers coming into the market. It's also a lot of traders who are just banking their profits at this point. They want to make sure the P&L is in the positive at the end of the year, particularly funds who've entered into gold right at the start. We know money managers, hedge funds have added big positions at the start of the year, and they want to make sure that they don't give back those profits. Hence, when 1300 broke, we saw one of the biggest one-day moves on gold in 3 years. Okay, and that is one of the reasons why we haven't had interest rates confirmed that that's going to go ahead in December yet. At the moment, the polls are showing approximately a 60% chance of an interest rate decision going into the December FOMC statement. But at the moment, we're already seeing quite a significant correction ahead of that. So to a certain degree, it's starting to be priced into the market. Downside, what could we look at the next key levels? I suspect gold will find support. If it was to continue to break down, the 1200 zone here would be quite a key line in the sand at the moment. That would be a 50% correction for gold. It's within the realm of possibility. It's also possible that gold will halt its decline around the current levels at 1250, around the 200-day moving average. Your average correction on gold, and we are in the midst of a correction now, and if we take into account the highs which have been produced after Brexit at 1375 down to where we are now around 1260, the duration of this correction is in the region of about 2.5 months now. Your typical correction in a bull market for gold, if you go back to all the historical corrections, lasts between 2 to 3 months. It's rare to see a correction last over 3 months within a bull market, which we've transitioned into in gold over the course of this year. So we're within the time frame where between now and the end of the month, we would expect this correction to be done, and then we might start seeing new fresh positions come into gold towards the end of the year for the Santa rally, and also as we go into Q1 of 2017 could also quite possibly provide some great opportunities to get into gold if it was to have a breakdown further, 50% correction, come down to around the 1200 zone. That could provide some fantastic opportunities as we go into 2017 and the next leg up, similar to what oil is doing at the moment. Then what you'll have is the next leg up where it starts to rally and come back. If it starts to look for a breakout of this previous trend channel, which we've been in over the last 3 months here, and the next run up higher here, if gold was to form a V-shaped reversal pattern and then come out of this pullback and have its 50% correction, the next run up to that trend channel, which might happen between December and January, could be huge, could be really large for the next run up higher. So that, just to put it in bigger picture of what's going on in the markets at the moment. Now you might say, okay, what happens if we go ahead with an interest rate decision in December? Will we see gold and silver, will they sell off significantly on the back of that? Well, we need to go to history to see whether history will repeat itself. And essentially what happened last year is over the course of the October FOMC statement, the Federal Reserve confirmed that they were in a position to increase interest rates in December. They didn't do it in October. And this is where we saw a turnaround in the market. The markets broke down and they completely priced that into the market before the December FOMC statement where interest rates were confirmed. And in fact, on that, we didn't see a breakdown. Once the interest rate was confirmed, gold actually held up and then significantly rallied into January. So just put that on your radar. If we repeat history again, and we already see a very significant corrective move ahead of the potential for the Federal Reserve to go ahead and increase rates in December, once they do, if they do go ahead and increase rates in December, if we're already back down at the 1200 zone prior to that, to a certain degree, it's already been priced in the markets, and you need to watch out because it could actually provide a great opportunity for longer term positions. So I just want to break that down for you. What we're looking at gold at the moment, it's coming for a retest, the 200 MA at the moment. I suspect we won't get too much more movement on gold now until tomorrow's non-farm payrolls. We've not got much else in terms of major news items coming out at the moment.